are one way in which companies share the wealth generated from running the business. They're usually a cash payment often drawn from earnings paid to the investors of a company, the shareholders. These are paid on an annual or more commonly a quarterly basis. The companies that pay them are usually more stable and established, not fast growers. But the value dividends represent for investors should not be underestimated. Sometimes the more cash a company keeps, the more likely it might overpay for acquisitions and in turn damage shareholder value. Often companies that pay dividends are more efficient in their use of capital than similar companies that do not pay dividends. Over the past 90 years, dividends have produced roughly a third of total equity return, whereas capital gains have contributed the remaining two-thirds. More recently, dividends have played an even more significant part in the growth of stock market investments, contributing nearly 40% of the stock market's total return over the past 50 years. One way to invest in dividend-paying stocks is to follow an index. One of the most widely used indices is the S&P 500 Dividend Aristocrats Index. The S&P 500 Dividend Aristocrats are companies that have increased their dividends for at least 25 consecutive years, demonstrating their commitment to shareholders. The S&P 500 Dividend Aristocrats Index tracks their performance and is mainly comprised of large, well-known blue-chip companies. They have a market capitalization of at least $3 billion and have an average daily value traded of at least $5 million over the last 3 months. Here's how the Dividend Aristocrats have performed over the last 15 years, when the much broader S&P 500 index suffered 2 mega meltdowns or bear markets of 40% or more. On a cumulative total return basis since the end of 1999 through the end of February 2015, the S&P 500 gained 91%, but the S&P Dividend Aristocrats were up 340% over that same time period. Why is this the case? One reason has to do with the relatively less volatile nature of the Dividend Aristocrats. Because they lost less during those bear markets, they had less ground to make up compared to the S&P 500 as a whole. As a result, the Dividend Aristocrats were able to outperform in dramatic fashion. And of course, there are 2 ways to look at investment of any type. Performance is just one aspect. The other aspect is risk. On a risk basis, dividend strategies tend to be less volatile than their peers in the equity universe. But in contrast to typical low volatility strategies, they tend to participate much more on the upside or when stocks overall are doing well. So dividend strategies like this one offer a built-in bias towards quality stocks. If you're interested in taking advantage of the benefits of rule-based dividend investing, but want to make sure that you avoid companies that deal in unethical business activities, consider the Azzad Dividend Portfolio, a socially responsible way to track the S&P 500 Dividend Aristocrats. On your screen now is a recent fact sheet showing the Azzad Dividend Portfolio. This portfolio is an ethically screened basket of stocks that seeks to achieve investment returns corresponding to the S&P 500 Dividend Aristocrats Index. Since they are taken from the S&P 500 Dividend Aristocrats, companies included in the Azzad Dividend Portfolio have also increased their dividends annually for the last 25 consecutive years. And as we mentioned, they must also pass Azzad's socially responsible investment criteria. So we filter out the unethical companies and keep only the holdings in the S&P 500 Dividend Aristocrats Index that meet our values-based investing criteria. The Azzad Dividend Portfolio is sought after by investors who are looking for investment income in the stock market. It generally holds fewer than 40 U.S. domestic stocks as opposed to the Dividend Aristocrats' 50 or so holdings, and is designed to have relatively low turnover. Not all dividend investments are the same. Whether it's the Azzad Dividend Portfolio, the S&P 500 Dividend Aristocrats Index, or any other strategy, both performance and risk will vary depending on the type of dividend investments you have. Some dividend strategies focus on utilities, which many believe to be overvalued in 2015. Recently, this has hurt the performance of those types of dividend strategies because other economically sensitive sectors, like industrials, have benefited more noticeably from the economic recovery in the United States. The Azzad Dividend Portfolio does not invest in utilities in part because of their high debt levels. The industrial sector has, however, consistently grown its dividends and looks to be attractively positioned for the near future. The Azzad Dividend Portfolio has a relatively large allocation to industrials, which has helped us so far in 2015. That's one example of how the focus or concentration in a dividend strategy can lead to a different investment outcome. Of course, like all of our investments, the Azzad Dividend Portfolio invests in multiple dividend-paying stocks, which can help you offset the risk of investing in a single security. Although it does not protect against a loss or guarantee a gain, more diversification can help you stay within a risk spectrum that's right for you. It can help you avoid taking bigger risks than you can handle, but still allow you to take enough risks to meet your financial goals. The Azzad Dividend Portfolio is just one of several investment portfolio options available to you through the Azzad Ethical Wrap program, our turnkey wealth management solution. Our multi-manager strategy brings together a team of world-class portfolio managers that most individual investors would not have access to. In addition to running the Azzad Dividend Portfolio, we at Azzad also manage the managers for these other specialized strategies. From domestic and international equities to halal fixed income and everything in between. Over the long run, dividend-paying stocks can add a huge bonus to your investment returns. But that doesn't insulate you from the market volatility or loss. When the entire market goes down, dividend payers will fall too. So we recommend diversifying your portfolio using the whole menu of Azzad Money Managers, because sometimes a company's fortunes will change and dividends can be easily cut or eliminated. Whatever you choose, understanding the role that the Azzad Dividend Portfolio can play in helping you reach your financial goals is important to us. We want to give our clients all the options available and help them make the right decisions for their situation. It's just one of the many ways we're looking out for your interests. Thank you for watching.